Are we in a housing price bubble? I mean, are we there right now at this moment, and you may just not know it? Stick around, and by the end of this video, you're going to have a definitive yes or no answer from me, and it includes some really surprising factors about the housing market that you may not have considered before. There's more to this than you're thinking, and I mean, just about every single year for, I'd say, 10 years now, people have been predicting a housing price downdrain or even a crash. I mean, 2012, 2013, 14, 15, 16, 17, 18, 19, 20, 2021, and 2022. And is there really any one person that you could ask that would really know the answer to that question? Is there a housing price bubble? I mean, who really has a clairvoyance to know? Is it the HUD secretary? Is it the head of the FHA? Or Fannie Mae? Or of the National Association of Realtors? Or of your state senator? Or of your state representative? Or of a local real estate agent? Would they really know the answer? What about me? Am I the one who would know?
Yes.
Would any of your elected officials know? Would any of your appointed officials know if there's a housing price bubble? What about Fed Chair Jerome Powell? What about Treasury Secretary Janet Yellen? What about Donald John Trump? Hey, he is a real estate guy after all. Or how about the actual person of one Joseph Robinette Biden Jr.? Now, surely if you got two of these people together to discuss a housing price bubble or anything else, they could clearly come up with a definitive answer for you.
You should go out and vote. You're in voting now. Vote and let your senators know how strongly you feel. Vote now.
Are you going to pack the
Make
court?
sure you, in fact, let people know
He doesn't want
you're a
to answer the
senator.
question.
I'm not going to answer the question
Why
because
wouldn't you answer that
because
question?
the question
You want to put a lot of
the
new
question
Supreme Court
is
justice,
the
radical
question,
left.
Will you shut up, man?
Listen, who is on your list, Joe?
This
Who's
is
on your
so
list?
right,
Gentlemen.
That gem of an exchange is from the 2020 presidential debate. Oh yes, the last two occupants of the highest office in all the land is who we're looking at and listening to right there. Doesn't that make you proud to be an American?
Yes, that's another way to think about it.
So getting back to real estate here, in fact, just a scant few economists, but a few more, I suppose, influencers and some contemporaries of mine really pointed to 2021 finally as the year for the housing price crash. And I have never said any such thing here.
Is there any reason to think that house prices, this price appreciation, could slow down over the next 12 months or even decrease in price? Any reason to think that?
I think it's likely that home price appreciation will continue, but the rate of appreciation will slow down. In fact, I am the one that had informed you last year that a housing crash has already occurred. It occurred in April of 2020. It was a housing supply crash, not a price crash. That is the time, about 2 years ago, when the housing supply fell off a cliff. Rather than have its seasonal spring rebound in April of 2020, it trended down and really hasn't recovered and doesn't show any signs of recovering that amount of supply anytime soon. The crash occurred. It was a housing supply crash. But let's get back to the price crash, what we're really talking about here. First of all, I think it's important to define what do we mean when we talk about a bubble or a price crash. Because I think these two terms, bubble and crash, they're a little bit nebulous and they're somewhat synonymous with each other. I think the best definition of a bubble popping, which we can call a crash, why don't we call that if there is a loss in value of 20% or more in real estate prices. And I think the reason that it's good to use 20% is because that is analogous to a bear market in stocks. When you have a loss of more than 20%, that's considered a bear market there. So let's define that as a bubble popping or a crash here. And remember, you want to be invested in an expanding bubble. And why is that? Because you've enjoyed price appreciation of whatever you own. Of course, you want to be out before the bubble bursts. That's what people are concerned with.
Stop. More! Say more! Oops, no. Stop.
Let's start with the most basic discussion and then work our way up to the most layered here. Let's take a look. Right here is where house prices are now. Now, who would say that we're in a housing bubble because house prices must come down simply because they've gone up? Well, that's someone that doesn't really have a whole lot of information. And the more information you have, the better informed decision that you can make. So let's do that. Of course, it's not just prices. It is inflation-adjusted prices. Okay, if someone's talking about inflation-adjusted prices, at least you can tell that they're thinking a little bit. CPI inflation has been between 8 and 9% lately. A lot of economists and people that really look at how the consumer price index is derived really think that that number is more like 15% when you compare the CPI to how it was more authentically reported back about 40 years ago. Well, if house prices are up 15% and inflation's 15%, then house prices aren't up at all. So it's important to remember that context of real dollars versus nominal dollars. Nominal means in name only, real means inflation adjusted. And remember, this plays into the concept of what I call tilt the chart. If you're ever looking at a chart, and it does not say inflation adjusted on it, just imagine that chart as being a piece of paper and you using your hands to tilt that chart a few degrees clockwise. That is how you turn nominal dollars into real dollars, the tilt the chart concept. What about mortgage interest rates? Though they're historically on the low side, they have risen really sharply lately, like really sharply in the last month. So of course we need to look at that because home buyers actually aren't that concerned about the price, the overall capital price of an asset. They're concerned with the affordability of that payment. So that mixes in the mortgage interest rate with that price. And hey, if you want to get an idea of mortgage interest rate direction, you really don't want to look too closely at the federal funds rate. Long-term mortgage interest rates, like 30-year and 15-year rates, they are more closely correlated to the yield on the 10-year Treasury note, something that's widely reported in the media, something that you can track. And did you know that there is an average differential of how much more the 30-year fixed mortgage rate is above the yield on the 10-year T-note? This is really going to help you determine and look at the future direction. That spread is typically 1.7%. Now, it's not always 1.7%, but typically the 30-year fixed rate mortgage is 1.7% greater than the yield on the 10-year T-note. So mortgage interest rates jumped up really fast lately, above and beyond that 1.7%, up to about 2.5%. And then, sure enough, you saw the yield on the 10-year T-note quickly catch up to those spiking mortgage rates. So that's something to keep in mind as you look at rates in the future. Let's talk more about the housing price bubble prospects. Hey, go ahead and put a like on this video if you like learning about what moves real estate markets and mortgage interest rates and some of those factors. I'd really appreciate the like. Now, what's one other factor that people think has a lot to do with home prices? And it does, but not as much as what people think. And that is one's personal income. Where are personal incomes? HUD will tell you last year that the median family income was almost $80,000. Now, the census figure is somewhat lower than that. But still, see, the problem is that incomes have had a hard time keeping up with inflation. They haven't kept up with inflation. Historically, they don't. Now, sometimes I hear people say something like, well, house prices cannot rise faster proportionally than incomes can. Well, of course, that's not true. We just look at what happened last year with house prices up nationally 20%. Incomes weren't up anywhere near 20%. So this happens all the time. There are a few different reasons why house prices can increase faster than incomes in a given area. Buyers don't just need income. If buyers have assets or equity, it's easier for them to buy a home, like the run-up in the price of their bonds or their cryptocurrency or even gold bullion or something like that. They can cash that in for a down payment on a property as long as their lender lets them qualify based on their income. You could also have zero income and pay all cash for a property. You sure don't need a lender for that. Another reason is that house price gains can substantially exceed an area's local income levels are the impact of foreign buyers in a market, or they don't even need to be foreign. They can just be out of area buyers. Oftentimes they're investors, even people like you and I that might invest across state lines. In fact, oftentimes these foreign inflows can be so substantial that do you understand that Justin Trudeau's administration in Canada recently banned foreign home buyers from buying in Canada for a period of 2 years? It's going to be interesting to see what effects that has on the market. But this is a substantial reason why home prices can rise faster than area incomes. It happens all the time. Now, when it comes to housing supply, this is really the big one. And you know it's the one that I've emphasized for a long time. We need an astounding and pretty jaw-dropping 3 to 5 times as much housing inventory just to meet the current high demand level, just to get it up there and meet that. That's not to be in a market that's out of whack, that's out of balance, that has an oversupply. That's just to have supply and demand in balance. You know, that's why I often say, keep your eye on the supply. Look, the direct mechanism that keep elevating house prices is this low supply, because if you have 30 bidders to one home, well, it's certainly going to sell for more than the asking price. And then that often becomes the new comparable for future appraisals and sale prices. If a lender appraisal comes in lower than the contract sale price, the deal does not get killed. The buyer will pay more than that asking price when there are that many bidders. Well, what about more supply? What about advancements in 3D printed homes? Shouldn't that make a home quick and easy to build and to do it inexpensively and quickly? No, 3D printed homes are not the answer. I dedicated an entire Get Rich Education audio podcast episode to that subject alone. Are tiny homes, or sometimes you'll see shipping container homes be built, are those the answers? No, that's not the answer either. I dedicated an entire Get Rich Education audio podcast episode to those topics as well. And I'm talking about this weekly on the Get Rich Education audio podcast. That is different than this show. I do a new show every week. Go ahead and grab the free Get Rich Education app on your phone, or you can download the Get Rich Education audio podcast wherever you listen to podcasts. There is a little bit of good news on the housing supply front. Housing starts were up last month, but that was up more substantially on the multifamily side. Single family housing starts are still lagging. It just hardly makes a dent in this jaw-dropping undersupply we have. And some of these shutdowns that we've had in China recently affect you in the United States housing market a lot more than what you think, because of course that's where we get a lot of our supplies from. In fact, I have some new data on that from John Burns Real Estate Consulting to share with you about construction delays. So when I give you my answer about housing price bubble prospects, which is what we're leading up to here, let's pull back and take a look at my record. In 2018 and 2019 on the podcast, I was talking about how real estate prices were appreciating at about 5%. And at that time, I did say, I really don't see what's going to make home price appreciation be more than 5%, which is about the historic average. But of course, no one could see the pandemic coming. That changed everything. There were rapid layoffs. There were a whole lot of unknowns when 2020 rolled around. Were you avoiding strangers at the gym that might breathe on you? Were you doing all these weird things like wiping down your groceries when you got them home, like out on the porch before you put them away in your refrigerator? It was really weird for me. In February of 2020, I was visiting India and Sri Lanka. In fact, I was still in Dubai March 2nd of 2020. It was getting to be a really weird time in the world. I didn't get home until actually late in the day on March 2nd. I didn't know if I was still going to get home at that time as the world was falling apart. But we really didn't have any recent precedent for what happens to home prices in a pandemic. Now, I'd like to look at history. Okay, what actually happened in the past and what lessons can we draw from that? But from studying the Spanish flu of 1918, which is the last somewhat similar event that we had, I couldn't really get any housing lessons from that. It was difficult to know what our direction was there. And then we got into this era of mortgage loan forbearance and eviction moratoriums. And by January of 2021, Joe Biden was indeed elected as president. And I told you about that time that this administration does not want to see people lose their home. They're not going to let it happen. They don't want to see Americans put out on the street. So don't expect any sort of foreclosure downdrain. And sure enough, for better or for worse, things like eviction moratoriums and mortgage loan forbearance did drag on. That kept people in their homes and prevented a foreclosure downdrain. So let me be clear on answering the housing price bubble question. The prospects for a housing price bubble this year, that bubble popping, they are low, so low as to be negligible. Now let's talk more about why. Now, most any reasonable person, I think they would actually want a housing market slowdown. It's crazy. We want a calmer market. I sure do. Redfin has released some data that they show early signs of the housing market slowing down. Now, that's not reflected in prices, but Redfin has shown a clear slowdown even over a month ago of fewer online searches for homes of all types. And those online searches are down over the same period from last year. Now, I recently talked to a home flipper. This is just just one flipper in one market, but he said just a month ago, he was able to put listings out there, and he often had a dozen showings and offers right away, and that's halved or less. That's slowed down substantially too. But the main reason for this overall price support is back to that chronically low housing supply. In fact, take a look at this. This is where John Burns Real Estate Consulting just reported that 76% of builders and remodelers are now reporting delays of 1 month or more. That's the 72% plus the 4%. Well, that is the largest percentage during this recovery. Construction delays. This is exactly what we're talking about with a low supply and contractors and builders having a hard time bringing that supply on. Remember, low supply is that direct mechanism that fuels the bidding wars and keeps supporting higher prices. Other reasons are, and I've discussed this before, are millennials, especially this group in their 30s. This is the biggest generation in American history, larger than the baby boomers. Follow the demographics, follow what they do. This generation, these people in their 30s, they are in prime, what I call household formation years. And really that's the term, household formation, because they are looking to get out on their own, and that's whether they buy or whether they rent. So it's great to be in something like real estate where you can really play both sides of this. As these wannabe first-time homebuyers get turned away from the market, they become renters. All these people in their 30s, this huge cohort, that's a big part of what's driving all this demographically. That's where your demand is coming from, coupled with this chronically low supply. And then the other factor supporting nominal prices anyway is continued high inflation. No one predicts inflation is going to come back to anywhere near the 2 to 2.5% that the Fed is targeting anytime soon. So with national house price gains of 18 to 20% last year, depending on what measure you looked at, Case-Shiller came in around 19%, I expect the home price appreciation to be about half of that this year. I'm sticking with my 9 to 10% appreciation for 2022, just like I've discussed before. Nothing's changed. But why only half? Well, there is that affordability constraint. Higher prices and higher interest rates constraining that affordability. So this year, no price crash and still greater home price appreciation than usual. This is good long term. This is good to have a calmer market. It is not good for a nation when it can't even adequately house its own citizens. That's why a housing supply crash, which is what started 2 years ago, is even worse than a housing price crash. I mean, look, even if there ever were a housing price crash, how bad is it really if what homeowners own only retains 80% of the value, temporarily, of what it had had previously? Well, compare that to a nation that's not even able to adequately house its people. That's why this supply crash is worse than a price crash that I don't expect to happen. I mean, think about how crazy it is to have such a low housing supply in a nation that many regard as one of the greatest nations to live in the world. We put a man on the moon in 1969, but we can't even house the Martinson family or the Joneses here in the 2020s decade, right here in our very own nation. That's why the supply crash is worse, supporting prices. But yeah, real estate has been so good to us over here on the investor side. You and I have been profiting from things that only make most people poor, unfortunately. And those are things like debt and inflation that have actually been good for you. Hey, learn how real wealth is built in the real world with real estate. Listen to the Get Rich Education audio podcast. If you don't know how to do that, just download the Get Rich Education phone app and listen to me on demand anytime. Hey, go ahead and leave a comment below on this video and I'll try to reply myself. You'll know it's me because I'll sign off with my name, Keith. I don't expect a housing price bubble to burst anytime this year. I'm Keith Weinhold. Thanks for being here, but you weren't here for me. You were here for you. I'll see you in the next video.